commercial real estate more, also because maybe I do a little bit of a parallel with my profession, right? Like which is a physician, that you get to work in teams. You get to put your expertise in certain field, and you. I mean, if you work together, you get to buy these amazing large apartment complexes, and you can help yourself, your investors, but also like the people who live in these apartment complexes. You are able to provide safe housing like to many people that deserve.
Mm-hmm. That's a great analogy, actually. Yeah, because it's definitely a team sport, the multifamily investing. Welcome back, everyone, to the Passive Road to Retirement podcast. I'm your host, Andrew Jarrett. Today, we are joined by Harry Nima Zegarra, who is the co-founder and manager of Nima Equity. Harry is a pulmonary and critical care medical physician, real estate investor, entrepreneur, and co-founder of Nima Equity LLC. Nima Equity is a commercial real estate syndication company where he helps physicians earn passive income, lower their taxes, and achieve financial freedom. Harry is a general partner in over 784 units in 4 different states. He met his wife, Mitzi, in medical school in Peru, and they finished their training in Pennsylvania and Virginia. Harry currently works as a tertiary medical center in Dallas, Texas. Harry and his wife love the outdoors, have 2 boys who love playing basketball and soccer. They love to vacation and travel, especially to Cancun in Florida, where they enjoy time at the beach, Disney, or Legoland. Harry is also an avid runner. Harry, thanks so much for being here, and I'm glad to have you on the show.
Thank you, Andrew. How are you today?
Excellent. It's a little cold down here in Florida, but we're getting through.
Yeah. No, I mean, like, interestingly, it's also a little bit cold here in Texas. I mean, we're in winter, but I usually try to go outside, like to do some workout and running, but it's kind of difficult lately.
Yeah. It's like 40 degrees here in the morning the past few days. You wake up and can't even see out the windows.
Wow, so that's cold. That's cold for Florida.
Yeah. So, well, Harry, for the listeners, if you don't mind maybe giving a little more detailed background about yourself and maybe how you got into the real estate.
Yes, absolutely. Well, first, like, thank you for inviting me to your show. It's really good. So, like, as you were saying, like, my wife and I, we both are physicians. We actually are both from Peru, from South America. We met each other when we were in medical school. We actually did medical school together. And and after 7 to 8 years of training, we decided to come here to the US to continue our training. And you may know or not, but I mean, we here in the States, we do like several kinds of training, like residency, second residency, or fellowship, subspecialties. So it takes like a couple of years more, like 3 to 6 years. So, and that's the reason we were in different places in different states or cities. Initially, we came to Pennsylvania where we did our residency, and I continue my training and fellowship in Virginia. I finished like as a pulmonary and critical care doctor, and after that, like we came to Texas, so like we came to Texas. South Texas initially was a private practice setup, and because of multiple reasons, actually family, friends, and also like it was like a bigger city, more opportunities. We decided like to come here to Dallas. So we have been here already for almost 5 years in Dallas, and we love it. And like our kids love it too. They have friends in school and all of that. So we just we're going to stay here for good in Texas.
Yeah. Dallas is growing like crazy too. So you got in a good time there.
Yeah. I mean, and that's what I've heard like from many people who have been here like for 10, 20 years. But even for me, I mean, we just came 5 years ago and we have seen how it has exploded, like, and it's growing and still like, and you see constructions and developments like all over, like, especially like in the north of DFW. Yeah.
Yes. That's awesome. So now when you moved to Dallas, because I know you've done single family as well before you got into commercial. Is that when you started buying single family, or did you do that in Pennsylvania?
That is correct. So we were always intrigued and interested in real estate. Like actually, we've bought our first property when we were like in Virginia. It was like in 2011 when all the market was down. It was terrible, and you get to learn. I mean, all these things about like short sales, foreclosures. We were like 3 months like before like started like our the fellowship, and we bought like a townhouse like as a short sale. So we were like running against time, and we were able like to make it. Like I think like we were able to close like 3 or 4 days like before we needed like to move like to Virginia.
Wow.
So it was really interesting.
Pretty stressful.
Yeah. To say at least.
Yeah.
And so we stayed there for 3 years, and after that, like we moved to Texas and we sold the property, and it had like appreciated very nicely. So we discovered there that there was something really good going on like in real estate, and the same kind of similar happened when we were like in South Texas in McAllen. We bought like a lot, like in thinking that we may stay like in the area, and we were planning like to build a house, but at the end we moved to Dallas. And also we sold that lot. Like I think it was 6 months after that, and even just in 6 months, we make like a good return on that investment. Wow. So when we came to Dallas, we also because of our background and our families had invested in real estate before back in Peru. Okay. We were really into it. So after 6 months, we decided that we wanted to stay here in Dallas. We bought our house where we're living now, and just after that, we started investing initially in single family houses. We were very, very, very grateful and lucky that we were able like to meet with the right people, and we were able to grow our business. And right now we own like about like 9 properties in the DFW area. Nice. Have been like for a couple of years already. I think we came in the right timing, because like in the last couple of years has been like booming and has been like incredible, like the growth of real estate here, like in Texas, as you know, absolutely. Right? But at the same time, after a couple of properties, you start seeing that it started becoming more like a second full-time job, right? Like, and we learned that very quickly. Actually, like in our first one, we were like kind of struggling, and we hired like a property manager, and that's what made us change completely like our business, and that's initially why we grew to 9 properties. But again, like after 9 properties, even with a property manager, it's still a lot of work. You need to talk with him. You need to address many issues on a weekly basis, and sometimes even more often. At the end of the year, you need to deal with all this paperwork and taxes, like insurance, mortgages, and all of that. So I mean, it was also kind of difficult, and that's when we decided about 2 years ago or a year and a half ago to switch into commercial real estate and more into apartment complexes and syndications. Yeah.
No, I don't blame you. It's definitely a lot of work running single family, and it can easily turn into a second job.
Yes. For sure. That's correct.
So you like the commercial more because you can hire out third party and you're not getting the calls, if a heater goes down or something, right?
Yes. I mean, and again, don't get me wrong. I still love single family houses, and again, like I believe in real estate, and it has many ways to do business and to grow your wealth and your path to financial independence. But I write real estate, commercial real estate more, also because maybe I do a little bit of a parallel with my profession, right? Like which is a physician, that you get to work in teams. You get to put your expertise in certain field, and you. I mean, if you work together, you get to buy these amazing large apartment complexes, and you can help yourself, your investors, but also like the people who live in these apartment complexes. You are able to provide safe housing like to many people that deserve.
That's a great analogy, actually. Yeah, because it's definitely a team sport, the multifamily investing. Absolutely. So now I looked on your website, and so you have the Doctors Investment Club. Maybe you can tell us a little bit more about that and how people sign up.
Yes, absolutely. So one of the things that I learned in the last couple of years is that people tend to work or invest in things that they are familiar with or things that they know about. Right. And that's why so many people, the only things they do is stocks or mutual funds or 401k. And that's the only way that people have been told how to invest.
Right.
But if you start doing your own research, if you start getting educated, you're going to find out that there's other ways, maybe not that stressful, maybe more reliable to increase your wealth and get passive income, right? And that's part of like now like our mission, like with my wife and I, try to spread out the word about like other investments that are not necessarily like the stock market, and also other investments, and also like to get some education about it, because I'm a true believer that you shouldn't invest, for example, with us or with any syndicator or in a real estate syndication unless you fully understand what is that about and what is that not about. So as because of that, we put in our website a lot of educational content. We put blogs. We're also starting like a YouTube channel with like with videos and all of that. And we also have like a 7-day passive investor course for physicians, because in part that's our background, but in general, it can be useful for any professional.
You'll have to send me your YouTube link. I'll put it in the show notes here so people can click.
Absolutely. I'll do that.
Yeah.
Thank you.
Great. Yeah, that was my next question. So you have the 7-day passive investing course. What does somebody expect to learn in that as a physician? Just kind of how syndications work, maybe the tax benefits and stuff like that, or?
Yes, absolutely. So like I try to bring awareness and again to define some concepts from basic to more elaborated, but also like to tell people, I mean, all the aspects of real estate, the passive and the active, right? Like, so one of the things that I like to do is that I give options to people, right? Like, and again, depending on your goals, on your time, and on your passion, you may decide you may want to be an active investor, and that's great, actually.
Right.
Or if, for example, you don't have the time, or you don't like to deal with tenants or with your land or things like that, maybe like the passive route is better for you, right? So I try to give all the information, all the tools, so people can have an informed decision on that. And if for any reason they want to go in the active part, that for example, in the single family houses, flips, or being a landlord, I mean, I'm with them, right? Like if they want to try that, I mean, like that's great, right? Like, and if I can be of any help in that regards, also I try to help out.
Oh, that's great. That's very nice. Now you do strictly commercial. So what is a typical deal that you look for? Maybe what you look for in a market, and unit size, maybe class of property, stuff like that.
Yes. So lately, again, like you have seen, like what has been going on in the real estate commercial markets in the last couple of years, with migration, with job creation. We try to go to states that are landlord friendly, that is going to support our business model, right? Like we try to go to places where we see like the area is growing, it's not shrinking, right? Like and we usually tend to aim for properties at least with 80 units or more. And the reason is because that brings a lot of benefits when you're managing the property, right? Like it's going to help you. And we all hear about like this economies of scale, right? And that's very important actually, because like if you compare, and I'm in both sides, right? Like I'm in the single family and also in the commercial real estate.
Right.
If you compare, for just as an example, I mean, like how efficient is to manage just 10 houses comparing, or like 50 houses comparing to a 50 unit apartment complex. There's no question around it, right? Like, so like the 50 unit apartment is going to be way more efficient. You're going to save more money. You're going to make also more money for your investors, right? And you're going to have a better relationship with your tenants too. Yes. So that's what we usually aim for, right? Like, and the process that we do, and you also do, like in your company, is a real estate syndication, which mainly is group investment. It's a group of people working together with the same goals and trying to buy like an asset that otherwise they cannot acquire because they are very expensive. They're like a multi-million-dollar like properties, right? So we work together. There's passive, there's active investors, right? Like the active investors are like the ones who manage the property day to day. Unfortunately, because of, again, economies of scale, we have a dedicated professional third management party that helps us with all these improvements in the property.
And not only that, but single family, it's based on appraisal, right? So it's commercial is almost more recession resistant, I guess, because it's based on NOI. So it's based off your income. And if you have single family, one goes vacant, you're 100% vacant. On a 50 unit, you're 1 out of 50.
Yes, that happened to me once, and that's tough. And I can tell you that's tough.
Yeah.
And I always give this example like to investors or people that talk with me, right? Like how a house's value is mainly like again on the size of the house, on some amenities, and also on the location.
Right.
How commercial properties are valued. They are valued as a company. They are not valued as necessarily like a property, right? Like so. All depends at the end of the year, your NOI or your net operating income, how much money the company makes at the end of the year. And I always give this example, like you can have two buildings or two commercial properties exactly the same, one across the other. But if one makes more money at the end of the year, that property is going to be valued more than the other property, even if they are the same.
Right, exactly. And you have more control as well, reduce expenses, try and increase the NOI.
Exactly.
Yeah.
There's way more benefits in commercial real estate for sure.
Yeah, absolutely.
Yes.
So, what have you seen tax wise as far as being able to help people so far with depreciation and things like that?
Yes. So that's also very important in single family houses, but also it gets more important in commercial real estate, especially for the passive investors. And many people they don't know when they invest passively in a real estate syndication, they also get all the benefits from the depreciation of these properties. But not only just that, they get other tax benefits which are called and are more specific for the real estate professionals, but it's bonus depreciation, and it's also cost segregation studies that they can accelerate these savings in taxes.
Mm-hmm. Yeah, we've seen deals where if somebody invests 100,000, they get 170 back. Year one, it's incredible.
Yes.
Can't do that in a single family.
Yeah, and that's something that I also try to explain and educate my investors, and always kind of also being honest, right? Like there's what we always call about like the depreciation tax benefits. It's not necessarily that we avoid taxes; it's that we defer taxes, right? Like and we learn how to work with the IRS system in order to defer these taxes and to keep more money for us at the end of the year.
Yeah, absolutely. So now the name of the podcast is The Passive Road to Retirement. So I always ask, if you had to pick for somebody starting out, what would be your suggestion on the best way to get their first stream of passive income?
Yes. So there's always this important thought process in me is that first you need to get educated. First, you need to know about what you're going to do. I mean, and there's many ways to get into passive investments, real estate, ATMs, carbon capture, different fields. But again, like the most important thing for me is to get educated, to know what you are doing, to know your sponsor, to go and do some networking. Like you can do some books, some audiobooks, some podcasts. But that's the most and the first most important step in everything.
Yeah, I would totally agree with you on that one. Yeah, if you're not educated, you're just going to make mistakes and it should cost you quite a bit.
Yes.
So, speaking of, have you ever had a deal go bad or anything unexpected come up?
Yeah, it happens to all of us, right?
Yeah, exactly. At some point, it's inevitable.
Yes, I mean, actually, it happened to me when I was more into single-family houses. So at some point, I was buying off-market properties, and you can imagine it's because here in the DFW, the market is so competitive that it's very difficult, like to acquire property like a good price. So I was trying to get off-market properties with wholesalers. And there was this situation when I decided to buy a house sight unseen. So I was getting more comfortable with my analysis, right? And I was maybe getting at that point a little bit cocky, like in the sense of, hey, I understand these things, and he's telling me that I mean, like everything is good inside, or maybe just like a little bit of renovation, right? But then when I acquired the property and I opened the doors, they said like, oh my God, like what kind of babe I've met?
Whoops. Yeah.
Yes, and I didn't I didn't lose money necessarily, but I also didn't make any money on that and like for some time.
Mm-hmm.
And I was very grateful for the experience because I believe like any failure to some degree is a learning experience,
Excellent.
right? And that has taught me like a couple of things. Like for example, I need to do my due diligence all the time, right?
Mm-hmm.
Like I just cannot take anything for granted. Like I need to confirm things.
Yeah.
And also like one of the things that I also tell my investors is that you need to get references, right? Like, I mean, if you want to work with someone, it doesn't hurt. That person is not going to get offended at all, right? Like
Right.
it's actually like good that you do your due diligence and start like asking for reference on that person.
Exactly. Yeah, that's great advice. Yeah, I can't
Yeah.
speak that enough.
Yes, exactly. It was a rough time.
Yeah. So our last question, and then we're going to get into our 5 to Thrive. If you could, I guess what would be the number one takeaway you would want the audience to absorb from the show? If you could, really tell them one thing, what would that be? Your advice for moving forward in 2022?
Yes. So, and that what I always say, like educate yourself, get more information, and important for me is to have the knowledge, is to have the information.
Mm-hmm.
But that itself, it doesn't do anything. You need also to take action. I mean, without action, all the information doesn't have value.
Yeah.
Right. Like so, that's very very important for me.
Mm-hmm. Yeah, you can read 100 books, but if you don't actually go out and take the step, you're never going to change yourself, right?
Absolutely.
Yeah, great advice. So now if people want to contact you and reach out to you, how can they find you and how can they get a hold of you?
Yes, we have our company and the website of our company is nimaequity.com, and it's with N as in Nancy, IMA, equity.com. And we also, like, again, as I just told you, we just launched our YouTube channel and trying to get more education. At some point, it's not just going to be real estate. It's going to be finance and wealth in general.
Nice.
People can learn a little bit more about that.
Mm-hmm.
But yeah, like initially, it's going to be more focused in commercial real estate, of course, because that's our business model.
Right. Yeah, I look forward to seeing that. That'll be great.
Awesome. Thank you.
So, all right. So now we're our 5 to Thrive section. So this is a word association game. So I'm just going to fire off, 5 words in a row.
Okay.
And, just give me a word or phrase that comes into, first thing that pops into your mind. And the only rule is you cannot repeat your answer twice.
I see. I feel like back in medical school again.
Yeah, exactly. Right.
Let's do it.
Ready for the test? All right, here we go.
Let's do it.
So first one, syndication.
Syndication, a great way to passively invest in real estate.
Passive income.
I think that's the goal for any passive but active investor at the end.
Mm-hmm. Financial freedom.
I would say to have choices, but also it's like it's a state of mind, because you can have everything, but if you're not happy with yourself, if you're not feel successful with your life and with your family, you're not going to feel like that way.
That's a great answer. I've never had someone. Yeah, that's a good one.
Yeah.
Mindset.
Oh, game changer.
Yeah.
Game changer.
100% agree.
Yeah. Game changer.
And last one is Nima Equity.
Nima Equity is our passion, my wife's and I, and mine passion, and a great resource for education in real estate.
Mm-hmm. Well, we're looking forward to the YouTube channel. And Harry, I really appreciate you being here. Thanks so much for coming on. It was a pleasure.
Thank you so much for having me as a guest. I really enjoy your interview.
Talk soon.
Thank you. Talk to you soon.